Mortgage Master here. Today I want to talk about your cash out options. A cash out loan refers to taking out some or all of the equity in your home as cash back to you, which you can then use to do home improvements, pay off debts, or even for investments, really whatever you need. In this video, I'm going to talk about the 3 different loan types for cash out, and in future videos, I'll get into more details about why you would want to do this, and I'll show you some hard numbers and actual quotes I've given recently. So make sure you subscribe. This is extremely popular right now, even with slightly higher interest rates, because home values have increased so much over the last 2 years, so many homeowners are just sitting on money, literally, and they're taking advantage of this to pay off debts. But actually something I'm seeing a lot of is homeowners who maybe don't have a ton of debt using the cash back to invest, whether it's in the stock market or mutual funds or maybe even purchase an investment home. The reason for that is that the rate of return on investments is actually higher than the rate to borrow money. Yes, even with the increase in interest rates. So many homeowners are choosing to pull that cash out and invest it to make their money work for them. Again, I'll talk more about that in a future video, but for now, I just want you to know what your options are. Just like with a purchase, there are 3 main loan types: VA, FHA, and conventional. On a VA loan, you can borrow up to 100% of the value of the home. Let's say you owe $300,000 on your home and it appraises for $450,000. Yes, you can refinance and take out a loan for $450,000, and after covering any closing costs, you could walk away with $140,000 or so in your bank account. Now, it's important to note, if you go over 90% of the appraised value, then the interest rate will be higher because it's a higher risk for the lender. So if possible, keep the loan amount to 90% or less of the appraised value. In that same scenario, if the appraisal comes in at $450,000, your new loan amount could be $405,000, giving you just under $100,000 cash back after closing costs. Now, this is only allowed on a primary residence. If you have an investment property, you have to go with a conventional loan. As with a purchase, there are no minimum credit score requirements and no maximum debt to income ratios, and we can even do a manual underwrite. On an FHA loan, you are limited to 80% of the appraised value. And honestly, with mandatory mortgage insurance on an FHA loan, for most people, this loan doesn't make sense. However, there have been a few instances where an FHA cash out refinance really was the best option for my clients, either because their credit scores were too low, or the debt to income ratio was higher, or for some reason it didn't meet conforming conventional loan standards. But I will rarely advise you to take this loan option, but it does have its time and place, which is why it's really important to work with a loan officer who knows all the ins and outs and all the programs available to you. Also, this is only allowed on a primary residence. Again, if you have an investment property, you've got to go with a conventional loan. However, if you have a relative living in the home, we have some options there. Again, stay tuned because I'm going to teach you some workarounds and tips and tricks in a future video. As with a purchase loan, for FHA, there are no minimum credit score requirements, no maximum debt to income ratios, and we can do a manual underwrite. A conventional loan is limited to 80% of the appraised value. So same scenario, appraised value of $450,000, that puts your loan amount $360,000, and that should give you about $50,000 cash back after closing costs. They do have minimum credit score requirements and maximum debt to income ratios, and we cannot do a manual underwrite. You have to get an automated underwriting approval. But I wouldn't be Mari the Mortgage Master if I didn't offer you some solution, right? So there are some ways we can try to make it work. We could lower your debt to income ratios by paying off debts with a loan. I also have ways to help you spike your credit scores. Yeah, lots of fun insider tricks, so keep watching. I have a pretty cool video coming out soon that talks about what you can do with that cash back and why it would make sense to do this even if it's increasing your interest rate. So don't forget to like and subscribe so I can keep you informed and help you master your mortgage needs.